DDAmanda is the #1 stock screener and scanner. This is how we're finding these winners early, guys. Simple to use by total beginners. Got advanced features for professional traders. Great support, 1 hour free one-on-one training, and check out these testimonials. I mean, they're off the hook. Guys love this program, and they're making a ton of money. Okay, what I'm using here is called Thinkorsync. Well, actually, it's called Thinkorswim. It's a great platform. And they have charts on options. So on this side we have the option chart. On this side we have the actual stock chart. Okay, and the stock here is SLV. I highly recommend you guys get an account with Schwab, throw a few $100 in it, so that you can get this Thinkorsync, Thinkorswim. Thinkorswim makes no sense. Thinkorsync software package. You get it for free, and it's real time. Okay, this is real time, baby. It actually was originally at Ameritrade, but then Schwab bought Ameritrade, so then you get this beautiful software package. I mean, they got everything. You got watch lists in here. It's really, I highly recommend it. You know, like you get these watch lists that are in real time, and it's really cool. So anyway, let's get back to options. I'm going to cover options, and that's the package I'm using. I've got my option chart here, the underlying stock here. Okay. Now, options aren't hard. It's people think they're all complicated and shit, but think of them as a little sister of the big stock. Okay. The big stock goes up, the call options go up, but the little sister represents 100 shares. So, if the stock goes up 1%, the call option should go up, 100% because it's 100 shares. You get it? But they trade just like anything else. They have a bid, they have an ask, they have a volume. Just think of them as that. They're like a little sister. They're like, a little sister of the big stock. You trade them just like any other item on the market. Okay, they buy them low, you sell them high. Um, they have a bid ask. That's how you think of them. Don't think of them as something weird and complicated. Okay, they're just they're just something. They represent 100 shares of the underlying stock. They have a value that goes up and down, just like the stock does, and that's what they are. That's very, very fucking simple. Okay. Okay, so what are options? Options are a derivative of the main stock. Uh, and there's two kinds. In other words, these are based on options are based on the underlying stock. And there's two kinds. There's calls and there's puts. And each option represents 100 shares. Okay. So on a call, let's bring up a 26 call here. Okay. So this is a 26 call option. All right. And when SLV here was down here at 25.43, 25.40 something, this call option was at 40 cents. Okay. Now a call option gives you the right to buy the stock at a certain price. So actually this is the 25.50. Let's get to 26 call here. So a call option gives you the right to buy 100 shares at a certain price. In this case, it's $26. So if you buy this option down here at, where it's at 24 bucks, and SLV is at 25, the call option gives you the 26 call option gives you the right to buy 100 shares at $26. Okay. So what happened? SLV went up to 27 here. Okay. And that's why this call option also went up, because you have the right to buy 100 shares at $26, like right here. Okay. SLV is at 27, so you could buy it at $26 because you have the option, and turn right around and sell it at 27. And the difference is, you make a profit on the difference between, the strike here, 26 and 27, which is $1. Okay, but you make $100 because you've got 100 shares, in theory anyway. The other kind of option is a put option. Now what a put option does is it gives you the right to sell a stock at a certain price. Okay, so what happened here on SLV, 100 shares at a certain price. So SLV here's at 27, and this is the put option here for 26, the 26 put option. So, and the reason this went up is, okay, at 27, when SLV was at 27 here, this option was down here at 14 bucks, okay? So, it wasn't worth anything because you have the right to sell it at 26, but the stock's trading at 27. So, what's the point, right? It's worthless. However, what happened is SLV was topped out and she dropped, okay? So now this put option went up. And the reason for that is because SLV dropped below 26, actually went down here to 25.50. Now you have the right to sell 100 shares of SLV at 26, okay? So you could go out and buy it at 25.50, turn right around and sell it at 26. And this is the theory behind it. And, you know, make the difference. 50 cents times 100 is 50 bucks, all right? So call options will go up when the stock goes up. Put options will go up when the stock goes down, okay? So those are the two different kinds, and they trade just like anything else, okay? You know, you buy them, you sell them, they have a bid, they have an ask. Anyway, that's the two different kinds: the put option and the put option and the call option. Okay, options have two things about them that that make them options. Number one is they do represent 100 shares of the underlying stock, and then the other thing is they have an expiration date. They have a sell-by date. So this one right here represents a chart of the April 17th. Today's the 14th, I believe. Yeah, it's the 14th. It's Sunday. So these have an expiration date of 4/17, which is on Wednesday, next Wednesday. And they also have a strike price. The strike price here is $26, okay? So this is a call option that expires on Wednesday, and it has a price of $26, and that's called the strike price, okay? So they have an expiration date and they have a strike price, all right? That's what options are. So, well, I'll just leave it at that, and then we'll get into more stuff. So, yeah. So on a call option, you make money if the stock goes up, okay? Like you buy it, this one here, you could have bought it at $30, and SLV moved up. It actually gapped up. Now you can sell it at $100. Okay. And even without this big move here, I mean, these are huge moves in here. I mean, look at that one, from 29 to $56, and then that's a double almost. I mean, like, here's one from 14 to 33. So these options move a lot, okay? Okay, options have two values. In other words, the price that they're trading at is based on two things. Number one is the actual value of it. Like, if you have a 26 call option, which is what this represents, okay, the actual value, because a call option gives you the right to buy a stock, like this option here gives you the right to buy the stock at $26, okay, and right here SLV is trading at $22, okay, so this option is worth $7 right here, but the actual value of it is zero. This has no actual value because you have the right to buy it here at $26, but hey, the stock's trading at 23, 24. It's useless. It's worthless. So the true value of this option is zero. Okay. However, you have another part of the price, which is called I call it the hope value, or most people refer to it as the time value. And generally, the more time there is before the option expires, the higher the hope value is, because you got more time. Okay, if you got more time for the stock to move your way, the option will be more expensive. Usually, it'll be worth more. As time goes down to gets down to the wire here, uh, the hope value goes to zero. It goes way low because there's no time left. So you have no time value. You have no hope value. There's no hope for the stock to do what you're hoping it'll do. Okay. Now the value of this 26 call, like right here, it's still worthless. It's worthless until SLV reaches 26, which is right about here. Uh, so this is all hope value here. Okay. Like on what is this, Wednesday? SLV is still at 25.50, right? So this is hope value because you're not at 26 yet, because you have the right to buy this stock, buy 100 shares at $26, which is useless because hey, you can go out in the market and buy it for 25.50, right? However, as soon as the price gets above 26, this option now has real value. Okay, because if you have the option to buy it at 26 and the stock goes to 26.50, look what happened to the option. It went way up because it's guaranteed that you'll make money. Because you could buy it at 26, turn right around and sell it at 26.50. So now you have, in addition to hope value, you have actual value, and they call this being in the money. When a stock is trading above a strike price, it's called in the money. The option is called in the money. In other words, it's above. It has actual value, real value. All of this down here, all this is hope value, because the actual value is nothing. It's zero, because the price is below the 26. Okay. And like I said, as time goes by, the hope value will generally go down. However, in this case, because SLV was going up, the hope value was also going up. And so the price of the option, like here, it's $50. Okay. It started down here at $7. But the reason it was so cheap down here is because SLV is at 22. Okay. Now, I mean, what are the odds of SLV going to $26 from 22, right? That's why this option was so cheap here. Okay, it was only $7, and then but as SLV went up, the hope value went up, and the stock, the option went up. Like here, it's at $28. Okay, and as it kept going up, the option hope value went up, but actually didn't go up as much as, well, it sort of kept pace. On a call option, it'll more or less keep pace with the underlying stock. But just remember this, that hope value is based on time. In other words, how much time is there for this thing to expire? Okay. I mean, back here you got a lot of time. Here you got less time. But the thing is that SLV blew past the strike price, so now she's in the money. Okay. All right, so that's the two values, hope value and actual value. Most options are worthless. Well, it depends. You could have like a 24 call, okay, and that one is in the money here, okay. Like right here on Tuesday, this option was in the money, okay. Started here at $30. So here you have two values. This option actually has value here, and that's why it's so much more. It's $173 here. So you have a combination of the hope value and the actual value. And here on this 24 call, which gives you the right to buy it at 24, and SLV is above 24, so this value, whatever value this is, uh, has real value plus whatever hope value there is based on how much time is left. Okay, so those are your two values. Okay, so how do you make money on options? Well, basically what has to happen is the stock has to move your way. In other words, if you bought calls, the stock has to go up for you to make money. If you bought puts, the stock needs to go down for you to make money. All right, and you don't care about the strike price, okay? Even though, like on a call, like this is what happened for me. What I did, like on I think it was Monday, I bought. Now these are the 417s, April 17th, and I don't have the chart on the 12th because this was last week. But anyway, I bought them right about here. I bought 26 calls, which were they were right here. They're at 34, but they were actually like I think 8 or something. And I also bought some 2650 calls because and these are you see these are cheaper because they're 50% more. So what happened is because I had a feeling that SLV was on a roll. She's on an uptrend. Look at this. And with all the crap going on in the world, I was thinking, you know what? She's gonna go higher. So anyway, right about here, I bought 26 calls and 2650 calls, and they went up a little bit, down. They're bebopping around here with the price. You see how it's in sync? Like this dip here is this dip here, and so they were basically just bebopping along here. And then on Friday, silver did a huge move. Okay, actually gapped up. Actually, on Thursday, she started going up. So this is Thursday right here. Okay, so the options started going up, and then Friday came around and she went up post market and pre market, just went crazy, and my option went crazy too. My 26 calls all of a sudden were in the money. My 2650s got in the money, and I sold. I think I sold right here at the beginning of the day. I sold it all, and then I'm looking at this thing. I'm looking at SLV here, and I'm going, you know what? This thing is. This looks toppy. This looks like it's a top. You know. I don't see this thing going any higher. You know. So right here, guess what I did? I bought puts. Okay, I bought some 2650 puts, like right here. Okay, so let's bring up the chart of the 2650 puts. Now the 2650 puts right here, we're way down here. Okay, now you can't really go by these prices because it was the 12th. It was the 12th that I did this. So on Friday, with SLV here at 27.24 and going up, this 2650 put was down here at 33 bucks. Okay, so I bought puts right around in this area, right about there, and sure enough, the bottom dropped out of SLV, and within a matter of hours, I think I bought 2650 puts. This one was in the money. Okay. So I think I sold this one right about, I think it was right around here at 2650. But even at 2650, this thing had a lot of hope value. Okay. And then she got into real money, real value. She got into the money. So that's how I did really good on Friday with these options. So that's how you make money on them, is if you think this stock is on a roll, it's going up, then you buy calls. And if you think it's about topped out or, a correction is due, you buy puts. And so that's how it works. The thing about these is you have leverage because you have 100 times, because you have 100 shares that you're controlling, you have 100 times the possibilities, uh, the power, 100 times what the actual stock has. Okay, so a lot of times though, if silver had not done anything, this value, like if she had stayed right here and I had 26s or 2650s, and silver or SLV stayed here at 2550, 2560, as time went by, these would have dropped. Okay, these would have gone down because they're not in the money and there's no time left. So there's no hope value. There's no actual value because the price is below the strike, and they just go to zero. And then what you lose is the amount of money you spent in buying them. That's all you can lose. You're limited. Your losses are totally limited, but they will go to if you spend $200-300 on one of these and it doesn't move, it doesn't move your way or goes the other way, you're going to lose that $200-300. But that's all you're going to lose. Okay, you're not liable for a bunch of astronomical you know because you got an option. You're just buying and selling options. All right, you have no risk more than the amount of money that you put into it. All right. And what makes them attractive is because of crap like this, where they can just go bonzo, and you'll make 3, 4, 5, 600% or more on an option, especially if you buy it cheap, like here. You could have got this a week ago at $7, and there it is at $1.30, or at $7, and here it is at $139. You know, calculate that. All right, I hope that's clear. I hope you understand options more. I did my best. They're not complicated at all. Uh, they trade like anything else. They buy them, you sell them. They do expire, and that's it. You're never going to exercise these. In fact, E-Trade won't even let you exercise. By exercise, I mean you actually, like on a call, you actually buy them. You know, you'll never have to worry about that. It did happen one time at Ameritrade. I bought 100 shares. They bought, in fact, they used their money because the option was still active and it didn't. Usually the brokerage will kill it for you, like within a half hour of market close. Okay, they will sell it. Okay, and because they don't want to go through the hassle of exercising an option, you know. But anyway, one time at Ameritrade, I woke up and I had 100 shares of Apple at like $400 a share. It was like crazy. And so what they did is they used I had an option that was still viable, and what they did is they used their money to, and I was in the money, so they used their money to buy the 100 shares and flipped them right around and sold them, and then I got my profit out of the deal. Okay, now here's another aspect. Okay, as the expiration date approaches, okay, let's pretend this was Friday. These expire on Friday. Um, the hope value goes to nothing. All right, especially well if you're below, like right here, like a 26 call here, you're below 26, and like on Thursday, these expire on Friday. Okay, these expired on Friday. So your hope value goes way down, and since there's no real value, the total value goes down. Like on Thursday, a lot of times you can buy an option at like $2, $3, or $5 or something each one, and each one controls 100 shares. So let's say you bought 10 of those. Now you're controlling 1,000 shares. Okay. Now I'm kind of a hard way shooter. If you crap players know what I'm talking about. So I like to gamble on Thursday and Friday, okay, because um, sometimes they'll move. They'll do crazy shit on Thursdays and Fridays, and your hope value is basically nothing. So the thing is you can get these real cheap, okay, And if something like this happens, you're talking a 20, 30, 40 bagger at times, because there's no time left, so they're real cheap. Uh, they're worthless basically. But if the stock makes the move like here, then now you're really rocking and rolling because you got these things dirt cheap, and all of a sudden you're in the money, or you have to be in the money on Friday for these things to be worth anything, or. But anyway, all this is from Thinkorswim, Thinkorswim. So I highly recommend you get an account at Schwab or whatever so that you can see these option charts. I don't know anybody else that has charts on options. So that's the other thing is when the expiration date is only a couple days away, these things get dirt cheap, and if you're lucky, they'll do a move like this, and then you make a real killing. All right. And the other way to make money, to gamble, is to go way out of bounds here. Okay. For instance, what did SLV go to? It went to 25.58. So right now the 26 call is down here for Wednesday, not Friday. The 417. It's kind of high. It's 35 bucks. The 26 call is, but then there's only 40 some odd cents. Okay, but if you look at your 26.50 call, okay, that one's at 20 cents or $20. Okay, because now it's got to go up $1.50 here, 26.50 strike price here. Okay, so these are going to be cheaper because there's more, you got to move further to get in the money. But they've got $20 worth of hope value right here because they're not in the money. They're $1 below, or at 26.50 is $1 above the current price. So because there's 3 days, you got $20. This is all hope value. There is no real value. But let's do something else. Let's go to 27s. In fact, let's go to 28s. Okay. Now, I'm going to have to bring up, I don't know what kind of chart it is, but 28 is up here somewhere, okay? So now there's, well, look what they're going for. They're going for $6, okay? So in order to make money, SLV has to go up. Okay, say these are at $6 here, okay? And SLV on Monday tomorrow goes to, I don't know, 26.50. Well, these are going to go up. Okay, these are going to go up to like 12 or 15 or something. Okay, so even if they go to 12, that's a one bagger with SLV only moving, if SLV starts going up. But these are 28s. The strike price on these is 28s, but it doesn't matter because if SLV is at 25.50, if SLV goes to 26, these are going to move a lot more. Okay, these are going to probably go to 9 from 6. What is that? 50%. And if SLV keeps going, like say it goes to 26.50, well, these are going to start going up too, but they're going to go up a lot more percentage-wise than the stock. Okay. So this is an example of, okay, and then let's say Tuesday happens. Now your hope value is going to go down. But if the stock goes up, this is going to go up because now on Tuesday you've only got 2 days, right, before it expires, and you've got 28. You're at a 28 call strike price. So SLV, let's say it goes to, if it really starts going up and starts, screaming next week, well, then your 28s could go, they could go parabolic. They could go up here to 30 or 40 or more. You know what I mean? So the other way to gamble and make money is to go way outside. Go, 28s. When the stock's at 25.50, go, 28s, baby. And the higher your strike price, being away from the actual price, the cheaper the option's going to be. Okay, like, do they even have 29s? Let's go to 12 here. Yeah, they got 29. Well, they got 2850s. Okay, here's your 2850 call for. It's got to do it in 3 days. $4. You know, the thing is, if SLE starts going up, these are going to go up too. Okay, and they'll move a lot more. But I mean, 2850. What are the odds that SLE is going to go to 2850 by Wednesday? That's when these expire. 417. All right, so that's the other way to do it, is to go way out. In fact, if we can go to Fridays. Okay, so these, what is this one? This is a 2850 call that expires on Wednesday. Let's see what this 2850 is that expires on Friday. Okay, it's at $4 here, but the 2850 is at $6, $7, because there's 3 more days. You got 5 days here. That's why this hope value is 7 here, but on Wednesday it's only, you know, on Wednesday it's only, where was I at? Oh yeah, the 2850s. On Wednesday it's only $4. So the more time you have, the more expensive it's going to be, and the less time, the cheaper it's going to be. So that's the other aspect. You can go way out, you know, like, way back here. Um, like here, remember how these 26s, 26 calls were only $7 here. You know, when you had a lot of time, but it was like $4 from 22 to the strike price. This is the 26 call. You see that? But as silver SLB moved, this thing went to $28 here, from 7 to 28. That's a 3-bagger, 4-bagger in one day, just because SLB moved, uh, you know, $1. Okay, so that's two ways to do it. You could go way high on the strike price, or go way low on when there's no time left. That's two ways you can get them cheap. And if the stock makes the move, you're going to make a real, the option will make a real move. Okay, that's the two ways to gamble. Now this video was about how to gamble with options. And generally this means buying the cheapies and, hoping for a real move. Now the other way that people do it is uh, a lot of guys, they play it safe, okay? So like if SLB here is at 25.58, they will buy an in the money, okay? An in the money option like 25.50, okay? The thing about it is, okay, this has a strike price of 25.50. SLV here is at 25.58. This option is in the money, okay? However, it's expensive as hell. It's $50 for each one, okay? But if SLV moves up, this option will also move up. But you're not going to get the parabolic moves like this, okay? Well, you will, but it'll more or less move with. You'll still make 100 times more, but it'll generally move with the stock. But like I said, it's more expensive. It's $50. So if SLV goes to 26, this could maybe go to 80 or $1. Okay, but you're not making the huge gains, the percentage gains. On the other hand, there's less of a chance for you to lose your money too. Okay, so that's the other way to play these options, is to play them, the ones that are in the money or close to them in the money. Okay, and there's options for you. I tried to explain it in a way that hopefully you understand. These things are simple as fuck. A lot of people get all twisted up in, expiration date and exercising and all that crap. Look at, they trade just like anything else, Uh, they're the little sisters of the big stock, but they're real powerful in that they have, a lot of leverage. So A little move on the big sister. The little sister will move like a bat out of hell. She'll really move, you know. And you buy them, you sell them, and that's basically it. Okay, guys. Again, once again, thanks for watching, and onward and upward. And if you want to trade stocks, check out DDAmanda, baby. All right, that's it. Everybody that tries DDAmanda absolutely loves her. These are all unsolicited, by the way. We didn't even ask people. I love you guys. Yeah, I love the program. So worth it. Probably made 500K. This guy's up 30K. Having everything I need to research on one page is definite time saver. Single day, 1525 profit. 15K on my first DD. Look at this guy. I don't know what to think about this one, man. This guy says he made 30 million. Read this shit. I don't know. He sounds kind of legit. I fucking love DDAmanda. Your program is the best tool I've ever used in the last 21 years. It just goes on and on. Okay, if you trade stocks, or if you're even thinking about trading stocks, this is for you guys. This is what you need. This is DDAmanda. It's the #1 stock screener and scanner that's out there. Um, and it uses both user input and AI to find and research winning stocks. And this is, it says right here, easy enough to use by total beginners. There's really no learning curve at all. You can be finding stocks within about 5 minutes after you log in. And it also has a lot of advanced features that are used by professional traders. Our mission is to help you make money by investing in stocks. That's the bottom line. That's what you want from something like this, you know. Now, I use this all the time, and I've found some amazing runners. You've got here, look at this. They give you 1 hour of free one-on-one training and instant support. Having good support on a program is just so critical, you know. I mean, here's their phone number right here. You can just call and text. They've got some testimonials here. I want to show you these because they're pretty amazing. I mean, look at this. This is what people think of her. I love you guys. Yeah, I love the program. This guy made 500K. This guy's up 30K. Everything I need to research. I wasn't even in Amanda one week, and he made 10,000 bucks. So these testimonials, it just goes on and on here. So anyway, they've got if you want to try, look at all these features. Dollars traded, 7MA crossovers, all sorts of stuff. But they've got an $8 a day trial subscription, so you can check her out and see if you like her. And then some other subscription levels here. Anyway, I highly recommend this, guys, and do check it out and make some money.